Absolutely. So the thing that's unique with blockchains is that they are transparent, right? You have all of the information that happens on a public blockchain. You can see. But there's a big problem in the sense that you can get the data, but it's not that easy to do stuff with that data, right? So one thing we do is we label a bunch of addresses, which means you can know which ones are exchanges, which ones are smart money, individual investors, funds, market makers, etc.
And we're back. We're here with Alex Svanevik, CEO of OG crypto data analytics platform Nansen. So, Alex, thanks for joining us. Could you tell us a little bit about your history? What path did you take to get here, and what are you up to today?
Absolutely. By the way, it's kind of fun for me being back in Tokyo because I wrote the first lines of code in a small Tokyo apartment 6 years ago for Nansen.
Okay.
But yeah, my background is in AI originally. I like to say I was in AI before it was cool, and discovered basically the crypto space in 2017. Very quickly fell down the rabbit hole and moved from Barcelona to Hong Kong, where I started working for one of these ICO startups back in the day.
Okay.
That imploded very quickly. And
out of curiosity, sorry to interrupt. Which one was it?
It was basically a company called CoinFi.
Okay.
One of a million ICOs at the time.
Yeah.
Their idea was to create sort of the Bloomberg of crypto.
Okay.
And so I kind of was very excited about that vision. And in some ways, you could say that Nansen also has a little bit of that to it, what we do. But I doubled down on the on-chain parts of information and analytics, and then ended up writing the first lines of code here in Tokyo almost 6 years ago. And we've grown to about 80 people today. We mostly help on-chain investors find out which tokens they should be looking at, performing due diligence on them, and overall managing their portfolios.
Okay, so could you tell us a little bit about how that works? The goal is to give on-chain investors the tool they need to make the right investments. Just broadly, or at the basic level, can you give an example of how that might work?
Absolutely. So the thing that's unique with blockchains is that they are transparent, right? You have all of the information that happens on a public blockchain. You can see. But there's a big problem in the sense that you can get the data, but it's not that easy to do stuff with that data, right? So one thing we do is we label a bunch of addresses, which means you can know which ones are exchanges, which ones are smart money, individual investors, funds, market makers, etc. So you can think of Nansen almost as like an X-ray vision on what's happening on the blockchain in real time. And so an example might be if you're a retail investor, you might want to know what the top funds or individual investors or even public figures are buying or selling on chain, which tokens they're buying or selling. And you could do that with Nansen. And you can set up alerts. You get, an alert if the Ethereum Foundation is dumping ETH or, whatever it is that's happening on chain.
Okay. So one idea is sort of copy trading.
Exactly.
Okay.
That's a common use case.
What are some other use cases? Could it be things like,
it could also be risk management.
Risk management.
So an example, in 2022, you had the sort of Terra collapse, right? And we had several customers who had set up alerts on certain on-chain DeFi pools. And they were notified that there's a lot of money going out of those DeFi pools, and they pulled their own funds. And then shortly after UST collapsed. Okay. So you can also use for risk management, alerting, etc.
That's interesting. So Satoshi, when he created Bitcoin and he made the blockchain public or available to everyone, do you think that was a bug or a feature? What are your thoughts on that?
No, it's a great question. It's something I get asked a lot, actually. I think there's pros and cons to it, for sure, right? I think it's a good thing generally that you have transparency. And I think a lot of people appreciate that you can monitor what's happening with funds. If you're seeing, for example, if the exchange you're depositing funds into is actually solvent, right? Does it have the funds? Does it have the reserves? And a lot of people used Nansen to track the whole FTX collapse as well. And you could see in real time, like Sam Bankman-Fried essentially sending funds out of the exchange, even after he said that he had,
I remember that, yeah.
So the transparency part, I think it is definitely a feature. I think from a privacy perspective, it's a little bit more nuanced, right? I don't think necessarily people want to be monitored. of everything they're doing with their payments. But I think from a trading perspective, investment perspective, I think it's overall a good thing.
Is there a way to reconcile those two things to, on the one hand, provide the transparency needed for like financial fairness in the financial markets, and on the other hand, provide the privacy needed to like protect people's financial privacy? Is there a way to reconcile those two things?
I guess that's like the $1 trillion question, right?
Yeah.
If I had the solution, maybe I'd be doing something else.
Okay, so you don't see anything.
Well,
I
think there are things you can do for sure. I think you probably want to have certain areas where you can get total privacy, but if the regulators are supposed to be kind of okay with it, you might require some guardrails, right? And so maybe you have, protocols or layer 2s and so on where you can deposit funds, but there's limits of how large the transactions can be or how much money you can send around, right? So I don't have a great solution to it. I think there are a lot of protocols and projects innovating in this space, like Aztec is an example, and there's many more. But I do think it's something that a lot of people, obviously care about. Privacy is a big thing that I think especially you have the people who care about it a lot, and they're very vocal about it, right? And to some extent, you could argue that privacy is taken for granted, right? People get surprised when they find out that their transactions can be monitored on-chain.
Yeah.
Right? So.
Yeah, it's interesting because the same way that maybe I would say you're using that technology more benevolently than Chainalysis, for example. They use that they use it for crime, right? To detect crime and stuff, but they also basically surveilling, the entire chain.
Yeah. I don't want to say anything bad about Chainalysis, but I think the ethos is a little bit different, right? Like when we started building Nansen, we said we're going to build for the man in the arena or the woman in the arena, the people who are actually using crypto. And we wanted to give them analytics tools for their investing purposes and trading purposes. So we don't focus on governments. We don't focus on, banks or anything like that as a customer segment. Most of our users are actually retail investors. And so I think the ethos is a little bit different. I do think players like Chainalysis are probably needed in order to have like full mass adoption of crypto, right? Because it's kind of the only way that certain players can interface with crypto. And a lot of the technology and the data we have is similar, but the purpose is different.
What made you, so you wanted to get all these solutions to retail investors to give them that alpha or intelligence, however you term it. What prevents another company from just maybe
what's the moat?
Yeah, what's the moat?
Yeah.
Like, Chainalysis is doing the same thing. They're just doing it in a different way. Like you said, ethos. They're doing it for crime prevention or crime detection. You're doing it for alpha detection.
Yeah.
Why can't I start my own Nansen?
Totally. Yeah. So I think there's a couple of things. One is that we have 500 million labeled addresses, and that's like proprietary data. Right. And we have very sophisticated algorithms. Now it's actually mostly agentic now. It's like AI teams, literally a team of AI agents that goes out and finds out like, what's this address? Oh, this is a Binance address. Here's all the evidence for it, and it compiles it. Right. So that's really hard to create that technology and also to have really great quality assurance of that data. So we have about 500 million labeled addresses. That's probably one thing. I think the other thing is you have to have really good data infrastructure too. Mm-hmm. Even if all of the data technically from all of the blockchains is public, you have to be able to serve it in real time in a reliable manner. And also you need to have really performant, querying analytics infrastructure, right? So that means if you're scanning like hundreds of millions of rows of data, you need to be able to do that in like, milliseconds, not seconds or minutes. So that's the other thing. You need to do a lot of infrastructure. And then I think there's a more intangible thing, which is about trust.
Right.
I think a lot of people trust our brand because they know we actually do the quality assurance of the data, and we've been around for a long time. You do see occasional new players popping up, and I think it's a good thing. Like generally, we should have more competition in every industry. But there's always that like feeling of how do you know that the data is correct?
Yeah, I'd like to follow up on that. I've never used Nansen, but when you've got a wallet that's flagged, okay, this is a Binance wallet. Is there like a percentage of assurance or a level of assurance? We know for sure this is one, or we're 90% sure.
Yeah.
Do you have that?
Yeah, there's sort of two categories.
Okay.
Some labels are deterministic and you're 100% sure because you can logically figure out what they are. Like a Uniswap pool,
Right.
you can label because it's a smart contract created smart contract.
Yeah.
And so you can just use that, say 100% accuracy. This is a Uniswap pool. Here are the two assets, that are in that pool. Then there are other things that are more probabilistic, right? So Binance, right? And as an example, and there's things you can do to reduce the uncertainty.
Yeah.
Sometimes you can even literally send funds to your Binance account and see where it consolidates. And based on that, you have extremely high confidence that it is Binance. But the thing is, there's no silver bullet because there are so many types of wallets. So you have to build up a lot of know-how and experience. But generally, we take the approach of if we don't have super high confidence, we know what this is, we're just not going to label it. We'll keep the evidence and the research, but we don't label it. Then we say it's an unknown wallet. So that's the thing. Like if you see a wallet in Nansen, you can be very sure that it's actually been quality assured. And here's the very cool thing. Every single address you've labeled, we have evidence compiled. So you can say, why did you label it Binance? Well, here's the evidence.
Do you get people reaching out to you being like, you labeled this wrong. That's not what that is.
Extremely rarely.
Yeah.
We do sometimes get people who want to have their own labels deleted.
Have their own labels. Okay.
Right. Interestingly, not that many individuals reach us. And if they do, we will delete it because it's a privacy thing.
Yeah.
And, they have the right to be forgotten, let's say, right? But if you're like a fund or a corporate entity, it's a journalistic effort and we don't really have to delete the information as long as we have the evidence.
Yeah.
Right. So we take a different approach and maybe you'll be surprised to hear that, or maybe not, that the entities that reach out to us to have their labels removed are mostly funds.
And that would be because they don't want people copy trading them.
Yeah.
That's interesting that they'll do that because it's but then what happens when that happens? Do you
just explain that we here's our evidence, or it depends. If they ask for the evidence, we'll show it.
Okay.
But
you don't remove the label.
We don't remove it. No.
So
you take corporate entities.
You take the approach of this is public information.
Yes.
We're providing information like journalists
because that's the thing. Like technically, it is all derived from public information, but it's very intelligently put together. So it's a bit like you're solving like a Sudoku puzzle, right? And you figure out like this address is Pantera, this address is Wintermute. We've seen they co-invested with a third party. Now we can figure out what that third party is, right? So there's that kind of logic that sits behind it.
Imagine I'm new to crypto and I want to step up my game in trading. And I've heard Nansen is a place that can help me do that. What would be the first steps I should take?
So the first thing you do is just go to app.nansen.ai. It's free to set up an account and you can see rankings of tokens. So you can play around with a homepage where you see different rankings based on different metrics. For example, you can look at tokens that are ranked based on smart money inflow or outflow. So you can see, we have a few thousand addresses that we label as smart money because they've done good trading. They've made good trades in the past and have high P&L. And so you can follow what they do and you can rank, and maybe now you can discover new tokens that you weren't aware of. The next step is to do due diligence, right? So you don't want to just buy it immediately because that's what a smart money address did necessarily. And so we have this feature, which is the most popular feature in Nansen called Token God Mode, where you can look at the token and it's a little bit like a Bloomberg terminal where you see, who's holding it. What does the distribution look like? Who's trading it literally right now? Who's bought it? And imagine you have like a price chart with candles, green candles and red candles. With Nansen, you can click on any candle and you can see who bought in that candle and who sold. So that's why I call it like an X-ray vision.
Wow.
Right? Yeah. You can get really deep and see what people are doing.
Is it expensive for retailers I'm sure you have a pro.
So there's a free plan, and then the lowest tier is $99 a month for the base.
Okay, so it's not prohibitively expensive.
It's not a Bloomberg term.
Okay, that's interesting. What are there any patterns that you're saying? Do you see different patterns coming up Because you guys are always looking at this on-chain data, do you see like different patterns coming up over time? And if so, what are some interesting things that you're seeing now that we've got all these institutions buying ETFs and Bitcoin treasury companies or digital asset treasury companies? What are you seeing on chain?
So there's always new narratives, right? And people trade differently with different narratives. When we launched Nansen in April 2020, the big narrative was basically DeFi.
Yeah.
This was 2020, right? And people were trading governance tokens. There was even this era of like food coins, like sashimi finance. We're in Japan now, so that's suitable. Then you had NFTs the year after, 2021, where people were trading in very different ways. They were looking at things like traits of the NFTs and how rare they were and trying to score them based on that. Then, many other narratives come around. Meme coins have been a big thing. Meme coins are kind of interesting and in some ways very well suited to on-chain analytics because there's no fundamental, right? There's no like, let me go and read the S1 or like, financials of the meme coin.
It's fully on-chain.
It's totally on-chain. It's totally speculative, for better or worse. And what do you care about then? Well, probably you care a lot about who's buying it. Like if your meme coin influencer is buying this coin, that's probably a good signal, right? So it is like, these are kind of micro games, and every game is a little bit different. Right? Definitely meme coins have been a big one. If we just take a step back, I've also personally been monitoring more of the macro stuff on which blockchains are doing well, right? So we also gather data on how much revenues the different blockchains create, like Bitcoin, how much revenues does Bitcoin generate, transaction fees, Ethereum, Tron, Solana, the layer 2s, and so on. And that's been interesting because I think it's a very open race right now with the different blockchains. When I started with Nansen, Ethereum was kind of the winning chain in terms of smart contract platforms. Of course, Bitcoin is in a league of its own for a bunch of different reasons. But for smart contract platforms, Ethereum was the one game in town. But now it's much more competitive. And you have many smart contract platforms that people are genuinely using, like Solana, Tron, Sui, Base, you name it.
So in terms of competition, you just brought something to my mind. We were talking about meme coins, and I was thinking about bubble maps, which is popular among meme coins. So in terms of competition, so you've got what makes you different from these other platforms like bubble maps or Glassnode or all these other analytics
I think
platforms?
bubble maps is a little bit more visually oriented, right? That's why the name is bubble maps, right? But again, it comes back to the labeling and the quality of our data. And so we also have, I haven't looked at bubble maps in a while, but we have really great chain support. So you can actually track like any chain you want to put funds onto. And we have portfolio tracking built into the product as well. So that means if you have funds on Bitcoin, on Ethereum, on Sui, on Solana, Aptos, like any chain, you can monitor and grow your portfolio in one place with our product. And that part is totally free. So people can just input addresses. You get one overview of all your holdings in one place. And that's pretty convenient as well.
Cool.
So we're here in Tokyo. You're obviously here for WebX. Why? And could you tell us like how you think about crypto in Asia? You've lived here in Japan.
Yeah, and I live in Singapore.
You live in Singapore?
Yeah. So I'm really bullish on Asia as a region. I was in Bali actually for CoinFest last week as well. Indonesia has like 20 million crypto holders, which is more people than there are, basically the same amount of people that there are in Scandinavia in total, where I'm from, which is kind of crazy. But I think Japan was actually really early with crypto. And then, of course, Mt. Gox meant that it sort of took a step back and maybe they got a little bit heavy-handed with regulations. But I think it has a ton of potential in Japan. I'm doing a fireside chat with Hasib from Dragonfly, who I just saw down the corridor.
He'll be next on this podcast, by the way.
Okay. Yeah, great. Yeah, he's awesome.
Yeah.
And so I'm chatting with him about on-chain data. I think the other thing generally is we're doing a lot of investments now in making our product much more AI native. And so I'm really interested in this question of like, what does investing look like in the age of AI? And hopefully I'll chat a bit with Hasib about that in our panel. But I'm also showing people some like secret demos on my phone of product development we're doing and kind of getting their feedback on it.
Just to broadly, the idea is rather than clicking on dashboards.
Yes.
You speak to it and ask it questions, and it gives you answers.
Like if you think like, what does investing look like in 2030? I don't think anyone's clicking on dashboards.
Yeah.
I think that dashboards are going to be dead in 2030. You're still going to visualize stuff, but you're mostly going to speak to the computer or like the slide.
Ask for something.
And it's going to be super fast and fluid, like sub-second, latency on back and forth. Have you seen the movie Blade Runner, like the original one? So there's a scene with Harrison Ford where he's talking to his screen and is like manipulating an image, zooming in, panning out, and hands through voice. I think that's more like the user experience we're going to have when we are trading. And that's what we're trying to build now with Nansen.
Very interesting.
So what do you guys have right now? Like what? So we have AI agents and stuff, right?
Yeah. So we have an experimental AI research agent that currently lives in Telegram. And you can ask it any open-ended question about on-chain, and it has all of our data, and it does research in seconds and comes back and gives you an answer to whatever question you have.
The text-based answer?
Yes, text. For now, fully text-based.
Right. So I guess in the future, it'll be building charts for you.
Exactly.
Visually showing you, like,
filter on this and like give me that. So
awesome.
So we have a big product launch that's happening soon, hopefully within the next month, and that's going to be kind of the next iteration of that AI research agent.
No, that's interesting. And have you been seeing, maybe you've walked around the conference floor or just from talking to VCs like Dragonfly?
Yeah.
What, have you seen anything that catches your eye that you think is paradigm shifting, at this conference or just lately?
The AI stuff we're trying to build ourselves. So that's kind of fun because that means I don't have to just sit and watch someone else do it. I get to like participate in the creation of it. But stuff that we are not building, I think real world assets is like the obvious next, 100 or 1,000x for the whole crypto space. So tokenization of equity, for example, both public and private. I've been super bullish on that for a long time. And I think it's finally now happening. Companies like Superstate, Robert Leshner's company, where they tokenize securities. I think, that's, and I saw Securitize here. They have a booth. So I'm really bullish on that. I think there's a chance, like, let's say, again, we go to 2030 and you look back at the history of crypto. I think there's a chance that this era we've been in will be seen as like the toy world era, where we had all these like native digital assets, like crypto assets. But then the thing that's really going to 100 or 1,000x the potential is when real estate, stocks, bonds, like all of these other things end up on a blockchain.
It's a much larger pool of capital.
It's so much bigger, right? So I think that's kind of, to realize the full potential of this technology, I think we have to get there. It doesn't mean that the digitally native assets disappear. They also have to exist. Like Bitcoin is the soundest money ever created. So we need to have that, right? But I think, real world assets definitely have a place on chain.
Yeah, I talked to Arthur, the co-founder of Tezos, but he had a different thesis about real world assets. And he thinks that we should be focusing on things that don't have market.
Like uranium. I know he's using uranium.
Exactly. Yeah, exactly.
And I'm bullish on that. I think that makes a ton of sense. And I totally agree, actually. Like, that's a great way to look at it. There are things that already have liquidity and a market. I don't think that's where you have the most value add.
Right.
Stuff that's illiquid. Uranium is an interesting example. It's a little bit, extreme, but there's also like private equity, right? Think of if you could invest in a company that is like Series B, C, D. And I think it's a shame in a way that you have to wait until a company is worth $100 billion before you can participate as a retail investor. Right. It would be nice if you invested like 1 billion or 2 billion or maybe even earlier. Right.
Right.
So.
All right. I think we're about ready to wrap it up here. Maybe last question for you. If you could snap your fingers and fix one thing about crypto today, what would it be?
Make regulations more pro crypto, which in the US, they seem to be fixing now.
Make regulations more pro. Can you expand on that a little bit?
Yeah. I mean, I think there's no doubt that the whole industry has been held back because there's a lot of fear of doing the wrong thing, right? Even if it doesn't really make sense. And so I think one big area which would be great is to like revisit securities regulations, not to like eliminate it, but to think about it in a new way because you can have more transparency now. And I think regulation is often introduced when you don't have transparency, right? You have to regulate a bank because you cannot see the inner workings of a bank. But when you have transparency, maybe there's a chance to dial it down on how much regulations you need. And I think ultimately, if you could do that, you would have more innovation. You'd have a little bit more craziness for sure. But I think that's just part and parcel of innovating.
Okay. Anything else you want to say? Where can people find you?
Yeah, people can go to Nansen.ai to check out our products. They can find me on X. Look for cute pudgy penguin. And thanks for having me on.
Okay, thanks for coming. And stay tuned, everyone, because we've got a great discussion coming up here with Hasid Qureshi of Dragonfly Capital, where we'll get his thoughts on the state of venture capital crypto. Stay tuned.